And in our top business story, inflation in Dubai softened last month as the effects from the recent drop in oil prices filtered through to consumers. The consumer price index in November rose 4.15% year-on-year, compared with a 4.38% increase in October year-on-year, according to the data released by the Dubai Statistics Centre on Sunday. The index was flat at 121.85 in November month-on-month, after rising 0.19% in October. Brent crude dropped by about 18% last month, and so far this year it has shed about 45% of its value to less than $65 a barrel. The slide to five-year lows has been caused by worries over slowing growth in Asia and Europe and a supply glut. Housing and utility costs, which account for 43.7% of consumer expenses, increased 7.13% year-on-year and 0.46% month-on-month in November. Food and beverage prices, which account for 11.08% of the basket, edged up 1.06% last month compared to the same period last year, but month-on-month fell 1.49%. The rise in property values in Dubai in the third quarter eased, growing by 1%, compared with a 6% increase in the second quarter, according to the property consultancy Jones Lang LaSalle. Prime office rents in central Dubai jumped 25% during the 12 months to the end of September, as the hard-hit office market continued to recover on the back of demand from banks, developers and airlines. According to a new report from the property broker Clutton's, Grade A office rents rose 8.7% from the second quarter to an average of 250 dirhams per square foot. The core business districts and the DIFC, downtown Dubai and Sheikh Zayed Road remain the most expensive offices in the city, where most Grade A space lets for between 220 dirhams and 280 dirhams per square foot. According to Clutton's, this rental growth has been driven by the strong demand for well-located space by both existing and new occupiers, with the banking and financial services, real estate and aviation sectors being among the most notable. Earlier this year, TCOM, which operates Dubai Internet City, Dubai Media City and Dubai Knowledge Village, increased rents and service charges by as much as 43% in some areas. The increase in demand also meant that rents for secondary office space rose by a staggering 18.2% during the third quarter to stand at 130 dirhams, a 44% jump on the previous year. As a result of rapid developments in major cities around the world, the demand for energy is expected to surge, which has made the interrelation between energy and water a pressing challenge for all cities, according to experts gathered at the 6th International District Cooling Conference in Dubai. More than 100 experts, advisors and heads of energy bodies gathered at the three-day conference and exhibition, which is aimed at highlighting the benefits of district cooling technology for ensuring sustainability coupled with economic benefits. His Excellency Saeed Mohammed Al-Tayer, the CEO and Managing Director of Dubai Electricity and Water Authority, also attended the conference and witnessed the MOU signing between Empower and Johnson Controls to increase collaboration on the first pilot project for district cooling. Described as a credible alternative to traditional cooling systems, experts claimed that the hybrid system is expected to reduce strain on energy and water usage in the country. According to the CEO of Empower, 70% of energy consumption in the UAE is used by air conditioning systems, and the technology is expected to reduce costs for the public, whilst playing a significant role in conserving the use of resources. It was further highlighted that as a result of the plants in Business Bay and DIFC, they have managed to reduce energy usage by AC units from 1.8 kilowatts per ton per hour to under 1 kilowatt per ton per hour in the buildings. Following the MOU signing, their next step is to create a command and control system to monitor the benefits in the long term.
We need to come up with a alternative to save the consumption of the water. In district cooling, the main operator or driver for the system is the chilled water. So basically, we are trying to use a substitute water like the THC treated sewage influence. We went to the thermal storage tanks to reduce using the portable water. Plus, we are using the seawater now. It's on our pipeline coming up. We are targeting to slash 30% from the individual end user bill if they are using a district cooling. And a lot of customers they are joining us. We have 45,000 customers under our portfolio. They are practicing this in every month, and they are getting less bill on their consuming bill comparing to the traditional system.
Although it isn't a new technology, experts from the United Nations Environment Programme as well as the US Department of Energy who took part in the conference stated that it is a global solution for more sustainable cities, describing it as an enabling technology for efficiency and thermal energy storage. Panelists stated that the system also increases the potential for renewable electricity whilst also playing a crucial role in cutting CO2 emissions.
District energy is very well suited for cities that have very high density, like Dubai, like Abu Dhabi. Those are examples where the benefits of district cooling, like increased efficiency, increased water efficiency, lower emissions, and also, again, you're providing all of that to the customer with no degradation in service. So those are very local benefits, but also as you think about it from a national or an international level, those benefits are accumulative. So when you think about meeting our climate goals, the benefits also provide that to the global arena as well. Well, there's a lot of different tools that are available from groups like IDEA and other groups to actually help cities evaluate whether or not district cooling or district energy makes sense for them. You know, certainly when you think about it, there's the local economics that have to come first. But as you really evaluate the benefits of district cooling, there's a lot of tools that are available at low or no cost to actually take that first step. And just encouraging cities to really take a look at some of those tools just to get the conversation started.
The West Texas Intermediary crude oil contract dipped to more than 5-year lows to close the week at 57.80 as added selling momentum continued piling the pressure on energy prices. Speculators and energy traders have been spooked following the vote by OPEC to sustain current output levels, and coupled with a strengthened US dollar, crude prices have slipped below the key $60 a barrel mark. The US dollar index sold off slightly in the week on profit-taking, but closed above 88 to maintain its bullish bias. The host of key figures due out from the US, capped off by the FOMC rate decision on Wednesday. We earlier spoke to Gaurav Kashyap, the head of futures at Al Pari Middle East, to find out about his views for the financial markets in the week ahead.
Well, it was a mixed week for the US dollar. We saw the US dollar losing some ground against the euro. We saw the euro USD moving up to 125 levels, at which point it found very, very stiff resistance and held below those levels. On the flip side, we saw continued falling energy prices. We saw the price of crude oil dropping to $56 a barrel, while the Indian rupee also weakened against the US dollar. Looking at the week ahead, we have some key figures coming out from the US. We have some manufacturing and industrial production figures later on today. These are expected to be in line with expectations, but more importantly, we'll move to Wednesday's trading session when we have the inflation figure coming out from the US expected at 1.5%. That's going to be in line with expectations. But more so, we have the FOMC rate decision on Wednesday, which is expected to be unchanged, but we'll be focusing more on the growth forecasts from the FOMC. We expect them to slightly increase their overall outlook for GDP. This could be in the range of 2.3 to 2.5%, and we expect them to see diminishing inflation. So once again, inflation below their target of 2%. And also we expect them to reduce their views on unemployment, with unemployment stabilizing at around 5.8% through the end of Q4. So overall, this could lead to a little bit of dollar bullish biasness, taking the US dollar higher against those asset classes. But overall, with Christmas around the corner and the holidays coming up, we don't expect to see major volatility. We expect the Euro USD to find support at 122.50 levels, with upper resistance coming at 125 levels. So we expect the Euro to trade in that 250-point range. Overall, the Indian rupee on DGCX, the INR USD, has closed below 159.50 levels. We now keep the next support level at 158.30 levels on DGCX. Overall, gold also, we expect it to find support at 1180 on the lower target, with upsides capping out at about 1260 per troy ounce. If we look at the crude, we expect the weakness to continue, but we're expecting a little bit of a bounce back with a little bit of profit taking to see the crude prices maybe testing 57 to 58 a barrel in the week ahead.